Hello, and welcome to today's video on property, plant, and equipment. In this video series, I'm going to be taking you through a super difficult question that appeared in a past UKZN test paper many years ago. I have broken this series into multiple parts to make it easier to process and understand. I will teach you how to read, understand, analyze, and master questions in PPE. Since this is a big question, I'm going to read through the whole question for you, and I'm going to take you through the little nooks and crannies in it. For anything that you see that's grayed out, please just be patient with me, ignore it for now. We will cover it in a future video. The following information relates to ABC Limited, a company that produces wooden roof trusses. Plant. All plant was purchased on 1 Jan 04 for 500,000 rands. The depreciation policy, which has remained unchanged since acquisition, is the straight line method over 5 years. This plant is estimated to have a nil residual value at the end of its expected useful life. SARS grants a tax allowance on the plant of 25% per annum on the straight line basis, apportioned from the date it was brought into use. So after reading this information over here, the most important thing that you need to do is take the 5 years that the question gives you and convert it into months. You will thank me later. This is important because later on in the question, when we calculate deferred tax using the balance sheet method, it's best that everything is expressed in months. So that's step number one. When the question gives you info in years or percentages, convert it immediately into months. 5 years, 5 times 12 gives you 60. That's an easy one. For percentages, such as 25%, you first take 100 divided by 25 to give you 4 years, multiplied by 12, you get 48 months. Also bear in mind that your tax allowance is apportioned. Please bear that in mind. Now that you have been provided with depreciation and wear and tear rates, it's important that you understand the various formulas available at your disposal to calculate depreciation and wear and tear. Traditionally, we've always used the formula depreciation for the period is equal to principal times rate times time. Rate would always be expressed in a percentage and time would generally be over 12 months. However, I'd like you to get comfortable with a new formula, being depreciation is equal to opening carrying amount less your residual value divided by your remaining useful life in months multiplied by the period used. Another important formula is your wear and tear. Wear and tear for the period is equal to your opening tax base divided by your remaining useful tax life in months multiplied by the period used. We have now come to the end of our part 1 video on PPE. Please join us for part 2 where we cover timelines.